theoretically, let's see if this works. Again, this is my first time. So I've
Okay,
done
great.
Facebook Live from Zoom, but I've never done YouTube Live. So it's kind of fun. There we go. Theoretically, yay! Let's see if this works. Again, this is my first time. So I've done Facebook Live from Zoom, but I've never done YouTube Live. So it's kind of fun. There we go. Theoretically. Yay! Let's see if this works. But again, this is my first time. So I've done
There's a delay.
I think I'm going to go ahead. Let's see, they go. Hopefully, yeah, there we're still live, that we don't have the echo on there. And we are, here we're going, hitting record. Yay! So this is our beginning. We are live streaming to YouTube. I don't know why, but for some reason we're not going to live stream to Facebook. So we will post the video later on.
Okay.
So we are definitely in Clubhouse, and we are definitely live on YouTube. So we got those two, and we'll keep on working on it. But one of the things, and I said this to you, John, before we started, I kept getting people saying, well, where can I find you? Where can I find you? So we decided we would start doing Saturdays, because I have been on Sirius XM on Saturday mornings for many, many years, over 10 years. And so really hoping to, again, bring all sorts of information. So I wanted to start with first-time homebuyers. And so we'll get a little bit, I want to talk a little bit about your background in a minute, but I want to do the opposite of the normal. Oops, you disappeared off of Clubhouse. Ha ha ha. Yeah.
Oh, sorry about that. There we go.
That's hilarious. There you go. You're back in. Poof.
Okay, let me set that down.
Okay, I know. And now you gotta just leave it alone.
Yeah, turn it down. I'm still getting a little echo, but that's okay. I'll turn it upside down. Or you have to hear me on there, don't you?
Oh, no, because I can hear you on the Zoom call.
Got it.
You can mute yourself if you want to mute yourself on Clubhouse.
Okay, I got to turn it over.
Figure this out, trying to figure out how do we get the most amount of information out there and help as many people. So one of the things I've been getting an enormous amount of questions about is, let's see, hold on. Let's get, okay, is about first-time home buyers. And I know for you, you were in the mortgage industry before you got into real estate investing. And one of the things that we have out there right now, people are asking about credit. And we've looked at this from a few different things. Now I'm going to hold up. You've got, I got it upside down. Secrets of a Billionaire, which is one of the books you have, but you have a whole bunch of books. But you have one, I was looking for it today. The book
I have a newer one too.
There you go. Oops, you got to hold it in front of it. Yeah.
Yeah, I know, because of the green screen. I've got a green screen, but I don't have it up yet. I'm getting ready to make a studio. But yeah, I got this. Yeah.
I know. This is our beginning. These are our beginnings. This video 5 years from now is going to be the one that we really laugh about. But just to start, I love just being, honest and real and raw. So number one, you have a bunch of these books, Secrets of a Billionaire. And one of the things that is really, really important, and I love Fred. We're going to have to talk about Fred as well. Fred's just a phenomenal idea in itself. But first-time home buyers, one of the things that first-time home buyers have been asking a lot about is credit. And I talk about this from a bunch of different angles. One of the things I like about your book, and not this one, the one that you have in front of you.
Same info.
But it's the same basic idea, is that you need to understand some basic concepts before you move on. And, I talk about credit a lot, but will you talk about why did you feel so compelled to actually write a book about credit?
Mainly to put my ideas down. When I was a mortgage broker, when I first started, I got everybody that nobody else wanted, because credit was easy to get back then. So they sent me everybody, being the new guy, that nobody could get a loan. So I had to figure out how to get them a loan. At the same time, I was kind of improving my own situation, because I had had a bad divorce many years before, and I was trying to rebuild myself. And so it was actually a good learning. Good learning for me.
Funny. I'm going to stop you just for a second. I think that's such an important part of life in general. Just a principle is that sometimes we need to learn to not only embrace the problem that we're facing, but learn to really love that problem, because that problem, not only can you move forward in your life and achieve all sorts of goals if you confront that problem and quite frankly embrace it and then love it, meaning how can you solve it? And the more ways that you become creative about solving that problem, the more that you can actually not only help yourself and move forward and achieve your goals, but you can help others, which is, I think, part of the reason that one of the things I adore about you is that once you figure things out, you're really anxious to share them with people. And so you said two other things that were really, really powerful. And that's that you went through a bad divorce. And I think that, not that this is a great thing to highlight, but everybody has gone through something that has probably challenged their credit and challenged the idea of being perfect in your credit worthiness. And I think so often that invalidation makes you feel like I think we already have enough little voices in our head saying that we're not worthy and that we can't have this or we can't have that. It's a weird phenomenon we have as, this wonderful human experience. But you had a bad divorce, and then you also had this opportunity to be able to help other people, and you had the desire to do it instead of running away. Hey! So that's your grandson?
This is Danny. Yeah, he just wants to say hi. Say hi, Jennifer.
So,
yeah.
Hi, Danny. He's adorable. Thank you for popping in.
Yeah.
Always love little guests popping in on every single one of the shows that we do. And it's so important. I mean, that's the whole purpose of trying to figure out how we can get this on YouTube and Facebook and Clubhouse and everything, is just to get the information out there. And again, one of my goals is to inspire people and to inspire people to say, yay, every day. But back to your story. So you were a brand new mortgage broker years ago, and you were trying to figure out how to not only solve your own credit issues, but to help other people. And so what are some of the basic things that you learned on that journey?
Well, number one, it seems obvious, pay your bills on time. Okay. You do have, what I found though, is you do have a window there, and you'll notice a lot of them, the mortgages that they'll say they're due on the 1st, but they call a grace period till the 15th. That means they will not consider it late or charge you a fee. Now, they also will not report to the credit bureau until you're 30 days late. So even though you may get your payment in after their supposed grace period, maybe the 18th or the 20th or whatever, but it still will not report to the credit bureau. That's very important. If you go over to 30 days, then they will report it late.
Well, and one thing I will say, just because we're in year 2021, that I have learned is that it's a little bit of a moving field now, because I've talked to mortgage lenders where some of those things have changed a little bit, meaning that sometimes, when they're reporting is different than when it used to be. Yes. So I would say one of the secrets out there is to really find out. And weirdly enough, this used to just be a mystery, but I have learned you can actually call your mortgage company, or you can even call your credit card company and find out not only, one, is it due on the due date, and is there a grace period? So those are two separate questions. And then the third question is, when do you report? When are you reporting it to the credit bureau? Because again, that is something that is changing depending on who the mortgage company is. And now with all of this stuff with the pandemic, it just changed all of the mortgage rules and regulations. And one, they're giving people other avenues, but it's really important. I think one of the things that you're saying that I think is critical is knowing and really confronting that. And so if you're not able to pay on time, and then also one of the things I'm sure you would agree with this is figuring out, like for me, I end up living such a busy life that I have found that it's really important to figure out ways, if that's an automatic payment, or if you're going to, have something come out from your checking account, or there's all sorts of different ways you can make sure you don't miss your deadlines or your due dates, or, whatever it is that you need to be looking at. What kind of things do you do to make sure you don't miss due dates or deadlines?
I personally I don't like automatic payments. I like to call them in myself or do it online automatically, because I know exactly when I did it and I get credited right away. That's what I personally like. Now, one of the things that I found out, which was kind of eye-opening years ago, is that grace period, whatever that may be. If you don't get it in on the actual due date, they still charge you interest for each day that comes in. So you might have 15 days of interest that you didn't know about. I found this out by payoffs, getting payoffs for people, exact dates. And they said, well, no, even though it wasn't due, I said, well, we had to do the grace period until the 15th. They say, no, it was due on the 1st. So we're going to charge you interest for those 13 or 14 days before we got the payment. So that's something a lot of people don't know. I found that out by getting payoffs, being a mortgage broker, because I had to have exact amounts. Okay. And that's why I found that out. The other thing is they can actually hold your account hostage, because whatever they say goes. Your credit card statement will say one thing that you pay off, but there's going to be an additional amount of interest from the time they get that payment.
Well, and that's something that that's part of when I was saying that the mortgage companies are all different, and you should communicate. One of the most important principles is communication in anything you do. That's a universal solvent for everything. I always think about, if you really think about how powerful communication is, think about the fact that you could stop a war with peace talks.
Absolutely.
So communicate with your lender and find out. And I would say that also more so, one of the ones I think that trips people up when they're first-time home buyers is not understanding when things change with their credit card company. They may get something in the mail from their credit card company, and yet then they didn't look at it in detail. And again, I think all of us have done it at some point or another. You got so much junk mail and you're like, okay, fine. They changed whatever, the privacy policy, or they changed blah. And what they really did is now they've decided if you have a balance, now it's going to be at 29% interest instead of whatever you had agreed to before with that credit card company. And I'm absolutely blown away by I would say all the changes that the credit card companies are doing, regardless of the pandemic, regardless of the hardships that people are facing or whatnot. And easily, if you don't pay attention to that, you can get yourself into a huge amount of trouble really, really fast. And that's the same thing, like you said, with the mortgage companies. If you don't know when is the due, I mean, not only when is the due date, but when is the grace period over, and when are they reporting it to the credit bureaus? Mm-hmm. And that's true for credit cards as well, because again, if you have all these, missed payments or 30-day late or whatnot, this is really going to affect them getting a mortgage, right?
Absolutely. It all makes such a difference. And it sometimes, as you know, too, 10 points can make all the difference in the world. So if you have one 30-day late, and even in the last few years, that could be just enough to make a difference on your rate, or if you get the loan, or your percentage. There's a lot of factors that go in there.
And so let's talk about that a little bit more. If we went into, as a mortgage lender, when you're looking at things, one of the big things that I know is really powerful is it's funny, we call it automatic underwriting. First of all, can you talk about what is underwriting? I can't believe how many first-time home buyers I was like, oh, darn, I forget. I want to do a whole hour just on some of the key words that we use all the time that we take for granted from being in the business. And one of them is underwriting. And then secondly, let's define automatic underwriting versus manual underwriting and some examples. So first of all, let's start with underwriting. What is the underwriting process of a mortgage?
Well, underwriting is when they actually verify your information, and automatic is a whole different story, because that's where they got into a lot of trouble a few years ago. One of the things, though, that you hit on was communication. One of the things that I used to do, and which was really, it was really powerful, is you get to know your underwriters and your processors. Okay, the processors are the ones that do the work for the underwriters. So you become friends with them if you're a good communicator, and you find out what they're looking for. I used to help my clients a lot of times, and sometimes it would make a difference, sometimes it would not, but you explain the story. Now, as you probably know, you can put up to 100 words on your credit report explaining your story of your own thing, but you can do that with the underwriters with mortgages. You just explain why you were late. Maybe you were off work because of an illness, or a job in between jobs, or whatever. Or, I mean, we got really creative. Sometimes we'd talk about the third-legged dog named Lucky that needed surgery and they couldn't make their pay. I mean, there's stuff you can do. I mean, not to be real funny with it, but I mean, you can be pretty creative. And a lot of times, most of the time, it was absolute, what happened. And you just have to explain it. It doesn't always help your credit score, but it may help your situation if there's a borderline situation.
And that's also when somebody's actually using eyeballs, a real person is looking at it. Because
Right.
when you go through automatic underwriting, it's just a computer. You're checking boxes. And I hate to say, most of us don't fit the boxes. And I want to celebrate all of us who don't check the boxes that automatic underwriting, and there's a process to learning how to do that. But I also think that we should all celebrate the fact that sometimes we don't fit the norm. And I'm going to use this one you may or may not appreciate. I think you might, just because you have such an amazing wife. But I think as women, one of the things that you need to get used to is that we all don't fit the standard size when we go to look for our clothes. And that can feel very invalidating from time to time. And I think that's the same thing for credit. And as first-time home buyers, one of the things that gets really confusing, and it just feels very invalidating, is that they don't understand that one size doesn't fit all. And not all of us are gonna be able to just automatically go through that automatic underwriting process.
Mhm.
And understanding that we don't all fit the automatic underwriting process, and that it's okay to not fit into that. It would be great.
Mhm.
And there are benefits to being through the automatic underwriting process. And sometimes that means that you checked all the boxes, and you can get a very fast approval. But two, I think you also sometimes you can get a better rate. Again, just because people are trying to do this volume of business right now, because the buyer market is so busy and so crazy right now. But what do you also, I'd love to see what are your pros and cons as far as automatic underwriting versus manual underwriting?
It's good if you're squeaky clean. Okay, like if you can check all the boxes, like you said. One of the issues that we used to have a lot is with rates. And rates are always a big deal, especially for first-time home buyers, because they're told from everybody, "Oh, watch your rate and don't let them take advantage." There's a lot of how it goes. Well, what most people don't understand with rates is there's a lot of other factors. How much are you putting down? What is your payment history? There's just so many different things like that. And I used to, the automatic process though would put you in a category. Well, sometimes people would get so bent out of shape on a 0.5% or a 1/4% or something like that, that would it gets confusing. And I think a lot of it is just anxiety for no reason, really, is the way I like to look at it, because you're probably talking $10 a month on a payment sometimes for whatever these rates are. And I've seen them get so upset, and it's usually with first-time home buyers from somebody else, from their uncle that thought he was a financial guru, or somebody that, there's all kinds of advisors that are not in the business, as you know, and they never will be, and they really don't know. They know
What do
they
they
got
call
to
it?
get it.
Do they call it the sideline quarterback or the backseat driver? I'm sure we could come up with a whole bunch of. It's
Yes,
somebody who's not really an expert, who's giving you advice, and unfortunately, that advice is not necessarily good advice. And the worst part about it is it makes you feel bad. And so I think that's one of my reasons of bringing it up is, so don't let anybody else take that excitement of being a first-time home buyer away, because you're again going to have to pay $10 more a month, or because you didn't check the right box. Well, guess what? Did you learn from it? Did you learn something you could do next time?
exactly. Yeah, everything is a learning experience. And if you didn't get the lesson, you're going to go through it again anyway. So you might as
Right.
well get it the first time.
I was just listening, I think yesterday, to one of Oprah Winfrey's things. And she talks about, did you learn it? Did you learn the lesson in the whisper?
Whisper, yes.
Did you have to learn it again? Did you have to learn it again? Did you have to learn it again? And, it's always more painful when when you also realize, oh, I already learned that lesson, but I had to learn it again because I didn't learn it the first time.
Mhm.
And so I think that's part of it, is learning to, number one, I think learning to laugh at yourself. And even when things are just really, really tough, the more that we can take a step back. Like I just recently, I had a deal where I was talking with a client and he said, well, he and his wife both were saying, so this has not been fun. Let's talk about, I was going, yay. And they're like, no, Jennifer, it is not a yay. And I was like, well, we're all going to be able to laugh about this. And he said, yeah, someday, but not right now. And I realized that also part of that is that we also need to step back and be able to find, and sometimes it does take some time. I'm not going to say there haven't been plenty of things that happened to me that I'm like, yeah, that's still not funny. Or no, I'm not finding the rainbow in that storm yet. But the word, you just have to keep remembering the word yet, because somewhere down the road, you're going to learn something from it. There is going to be a rainbow in any storm that you face in life. And with a first-time home buyer, it's one of those that the more you can find, these are all new things. It's almost like, I remember the frustration. I don't know if you remember the frustration the first time you tried to ride a bicycle, right? Mm-hmm. And you're like wobbly, 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 wobbly. And then you're just like, this is so frustrating, and you see kids at all sorts of different stages of that frustration of no. And then how do they, when do they pass through their fear and take off the training wheels and just go for it? And I think that you could like that, I love watching funny videos that make you laugh, but think about how many times would that make you laugh is that moment that a child all of a sudden is like, yeah, I got this, after they've fallen over, or someone's grabbed them, or, they've taken off the training wheels. I think that's the same way, right?
Yes, absolutely. The more, and I liked what you said with getting the lesson in the whisper, because the whisper is always there. I think it was Robert Allen that said, there's three ways that we get the lesson. It's the whisper. If you don't get it, then you get hit in the head with a hammer. And if that don't work, then you run into the brick wall with your car. And eventually you're going to get it. But just the idea is to get it in the whisper, like you were saying with Oprah. I think I've heard that before, but that was just a great lesson. But yeah, your bike is a good analogy, because once you learn, you'll just know it. You can always go back to it. Now the credit will change a little bit. There's some factors and some, they go by modules, and there's just different things they go by, and you don't really need to know all that. There's just a couple of basic things to know, paying on time, your proportion of balance to limits. I mean, there's some basic things that you need to know, and they don't really teach you necessarily. And the way we found out was just a lot of trial and error. I mean, when I found out a lot of stuff on my own when I was trying to get a loan for, I bought a house when I was 18 years old. I was just a couple of days into being 18. I bought a house, we assumed a loan, and things were different back then. Okay, after I got divorced and I went back, it was a whole different story. All of a sudden I had to have money, and I had to have, payment histories, and I had stuff going on. There was stuff, and so I started learning some of that. And then when I became a mortgage broker, it was kind of by default, because I was really in the insurance business. But when I did that, then I really started working with people, because I got the toughest ones. Well, what do you do? Okay, well, you can dispute some things. Sometimes that backfires. And when people go to improve their credit, they always do.
We have to talk about that for a second, because
yeah.
I don't think people realize, it's hilarious. I don't think people realize, I actually know stories like this, but I would love if you could share a story on, so sometimes you go to dispute something and it backfires on you. Share a story of when that could happen, or maybe leave the name out to protect the innocent. What happens? Tell us a story about that.
There's lots of them on, and this is a tough thing to do, especially when you're trying to buy a house. But you'll see these things. A good example. Okay, let's just take a good example. Somebody will have a medical collection of, say, $1,800 that's 5 years old. Okay, it's quiet. Nobody has said anything with that. Okay, well, by being a good credit borrower, good mortgage borrower, whatever, you want to go in there and take care of all your stuff, because that was one of the things we always tell you: take care of all your dirt, all your stuff. Okay. Well, what will happen sometimes, and this has happened several times, you'll have a bill with the original creditor, say Mercy, hospital or whatever. It's $1,800. You'll write to them saying, we want to take care of this, or you'll contact them. Well, then all of a sudden they go, well, we sent that to a collection department years ago. Okay, here's what happens. They will update, Mercy Hospital will update theirs as being a fresh collection. Now, instead of being 5 years old and not hardly a factor, you've updated that. Well, their new collection agency, ABC, all of a sudden says, oh, so this guy's wanting to do something. So now they come and put something on your credit report. It's not $1,800. Now it's $2,300 because we have fees and stuff we have to pay. But it's also looked at as another account number because they have their own number. Then since it got old and you didn't pay it, then they could send it off to XYZ company. So now you've got 3 collections and they all look fresh and they're all different amounts with different numbers on your credit report. Now you got yourself a mess and your score just dropped 60 to 80 points because you got fresh collections. So forget it,
Yikes. That is, yeah, I was going to say there, and that's why I wanted to bring it up, is because one of the things that I see is a lot of times people have these credit repair things that they're looking to do. And again, it backfires exactly like you just said. Wait a minute. So you just talked about it. To go through that, number one, you made it fresh.
Yes.
Number 2, you have a second account number. Number 3, it just increased.
Yeah.
You just increased the amount. Those are 3 terrible results from this. And so I guess part of it is just, you really need to understand. I would say the biggest principle that I have learned with credit is continue to keep asking questions, because, and then be careful who you're getting your answers from, because like, I hate to say it, sometimes the mortgage lenders are not always going to give you the full thing because, well, at least like I could say one of the experiences I had with a car dealership.
Oh.
I was just saying, I'll do it probably fits a few stereotypes, so we'll just leave it at that. But the same thing with mortgage lenders is that sometimes they don't have the right information themselves. Like the lender themselves might not actually be educated on the specifics of your credit challenge. So that can be part of the frustration. Number 2, they might have an ulterior motive, which is, I want to say that in a nice way, but sometimes there's not everybody out there is not looking for a win-win. I mean, when I talk to people and I hear that they don't like real estate agents, and I'm a licensed real estate agent in Virginia, DC, and Maryland, all 3 states. And I love helping people. It's almost right on the verge of probably an addiction. I love, love, love helping people so much that I will just stop what I'm doing. And because I just love helping people. However, one thing I've realized is that one, people need to be able to ask questions and let me know when they don't know, because unfortunately, one thing I think we all share is the idea that someone knows something when they don't know. And yet someone is afraid to speak up. And I've been on both sides of that. I've been on the one side where I'm in a room where somebody thinks I know and I don't know. And then I've also been the person who's trying to help somebody. And I think my client or my friend or whomever knows and fully understands something, and they don't, and they're not speaking up to ask the question. And that's so frustrating to me, to not be able to help somebody in that way, because I don't know that they don't know. So that's part of the reason I started with, okay, so how do we define underwriting, manual underwriting period, and then manual versus the automatic underwriting. And so you just have to remember automatic underwriting. I always want to call it's the robot deciding to approve you, because it's just a computer algorithm, right?
Yes, exactly. You just answer and it's a yes or no. You fit in this category. That's what you're getting. That was one of the problems we had with the what was they called it, the ninja loans a few years ago, the non-income, no job, no income, or whatever there was some craziness going on with that, but that's what it was. It was all completely automatic. They didn't, you just said you made 150,000 a year when maybe you only made 30,000 a year, but your credit might have been 810. So you fit all this kind of stuff, and they would just kind of pencil in what they wanted to work for the automatic. That was a big problem.
And I think that, thank you for saying that, because I think that has changed so much. I mean, not only my family members, names will remain unsaid, but I've realized that so many of my friends, family have, these high credit scores, but they can't get a mortgage.
Yes.
And what I've realized is, so kind of the overcompensation, or going, that pendulum that swings from one side to the other side. One thing I've realized is that they start with things being like you just said, with those ninja loans, the no income, you could just state whatever you wanted and you were given money. And unfortunately, so now people are, that whole credit score and the way the automatic underwriting and checking those boxes has changed. And that's part of where I say, oh my gosh, you need the latest and greatest information, because it is so different. Now, we're in year 2021, and it's a very busy time for first-time home buyers, but they don't have the information they need, because a lot of them are basing this information on from ages ago, or from some of these credit sites that are not really giving the full picture. And that's one of the reasons, is be careful who you're asking, who you're accepting the answers from, but also keep asking the questions, and be vulnerable enough to say when you don't understand. So not just that you don't know, but that you don't understand. And I guess part of that is if you can't do an example, if you can't use whatever, if you can't give an example to your child or your grandchild on what is underwriting, then you might not understand it, right?
Absolutely. And going back to what you said, communication right there it's so important with everything. And too many people these days, and I hate to say it, but some of the younger people, they don't want to pick up the phone and talk and ask questions, and you can't always explain everything in an email easily,
Or a text message.
Or text is even worse because it's abbreviated.
I can't tell you how many confusions I've gotten into with clients as well as friends with a text message, because I thought I communicated well, and then I realized, and then I could see how it could be from different viewpoints. If you look at it from a different viewpoint, you're like, oh, now I get it, why they didn't understand what I was talking about. And I thank you for going back to that. I think communication is key to being a first-time home buyer, is really communicating not only what you need and what you want, but also communicating what you don't understand.
Understanding is key, just like you said too, because you can hear the words and not get it. And that's just the way the changes are too with everything. I mean, first time home buyers, you're and especially if you go through and you listen to one person say something about credit, then you listen to somebody else, then you might get, and I still haven't found one, but you might get involved with one of those credit doctors, which I just cringe when anybody tells me they've gone through a program, because I almost know where it's going. And they usually get, sometimes, I shouldn't say usually, but a lot of times they will get into more trouble by doing that, because they will open up these sleeping giants is what they are. And they will also, get themselves into more debt. And then they can obligate themselves to some of these, and some of them call themselves law offices and stuff, but they can get tied up with owing them several $1,000s or a monthly amount for years and years at a time. I've actually seen some of these credit doctors ruin people's credit because they didn't pay them. So you just really have to be so careful with all that and understanding. I mean, we're just bombarded with too much information.
Yeah. And I think it's like I said, I know you've been in before, when I had Merrill Chandler, who is somebody who is just, his whole life, all he does is live and breathe credit and funding. And one of the things that's so neat is finding, somebody who really, like he was one of the founders of Lexington Law. And now he's like, don't go there. Because from his viewpoint, he's like, again, just what you just said, they seem to have the answers, yet it's only a tiny part of the big picture, because funding and what the lenders are looking for. I actually just did a Facebook Live with him this past week, and it was so cute, because one of the guys who it was streaming, it was a lender who said, I put all of my buyers, not just first time home buyers, all of my buyers have to go through Merrill's boot camp. And it's a 2-day boot camp because it's not just about a credit score. It's really about the big picture, which you've alluded to earlier. And it's about the latest and greatest, so to speak, as far as what's in the lender's head right now. What is their viewpoint? What are they thinking about when they're looking to approve somebody next? So it's really important to look at that and to figure out what is going to be, the most important thing for you at this time, because that's different for every single person. And I know that's one of the things, I know you're not doing mortgages anymore, but one of the reasons I wanted you to talk about it is because you've also seen so many changes for first-time home buyers. And of course, we've been focused so much on the credit aspect of it, but what other things would you say are really important for first-time home buyers to make sure that they are getting the best rate and the best mortgage? Because there are a couple different types of mortgages, right?
Oh, there's so many different ones out there. It's amazing. And you say I don't do them now. I do my own mortgages. I'm actually the lender on my properties is what I do.
We should talk about that.
That's another story.
Let's not confuse them right now.
Let's not confuse them. Yeah. No,
but you work for a big mortgage company. You're not looking to help people get mortgages right now, right?
I just do my own. That's what I do right now. No, I'm not working for a company. That's why I can, it's easier for me because I can sit back and look now and kind of watch what's going on. What you have to find out, I guess, and it goes back to communication. What are the lenders looking for? If you go through, you're going to go through probably a realtor that's going to help you for a first-time home buyer, which I would highly recommend. Find somebody that's credible and somebody that knows what they're doing with first-time home buyers. Because there's.
And let me interrupt you for a second. If you're interested in 17 questions you should ask a real estate agent when you're interviewing them as a first-time home buyer, go to my website at jenniferjhammond.com. jenniferjhammond.com. And I'd put a little thing up, but jenniferjhammond.com, and you get them for free. You just give us your email, your name and your email, and there's 17 questions you should ask. And you should always interview your real estate agent. And part of the reason is because one of those questions in there talks about how do you want to be communicated with? Just something we were just talking about. Do you prefer text messages, emails, phone calls, meeting in person, face-to-face? And if you don't interview a real estate agent, you are... So often people just take a referral from somebody else and they never really get in communication with somebody because they just hired them and they never actually really got to know, is this the right person for me? So I just wanted to interrupt just for a second. Number one, take those 17 questions and interview your real estate agent, and take John's advice in the fact that you should have a real estate agent because they're one of your advisors. They're going to help you.
They're on your EA team. And like you just said, I would recommend anybody, not just first-time home buyers, getting your publication there. That is invaluable because so many people, just like you said, they'll go, well, my cousin's sister is now a realtor, just got her license. I know the horror stories. You don't even have to go there with that. And unfortunately, she's never done a deal, or she's done 3 deals in 4 years because she does it part-time because she's really a school teacher and she does taxidermy on the side. Or, I mean, there's those kind of stories. And it's not that they don't want to help, but it's just, they don't know what they're doing. And, I relate it just like every field, though. Mortgage brokers are the same way. Car dealers are the same way. There's about 80% of the people you do not want to do business with. And there's about maybe 10 to 20 that are the top of the line. And that's the same thing with a realtor. When you get yourself somebody that specializes in what you want to do. Okay. Don't take your advice from somebody that's not doing what you want to do. And the best advice you can get is what you pay for. People complain about commissions and all this other kind of stuff. You're getting maybe 20 or 30 years of experience for them to be a specialist in that area. Yeah, you say, well, they didn't do much. Yeah, they did. They did a lot more behind the scenes than you'll ever know. Okay, by far. And that's just something that, and mortgage brokers are the same way. And going back to what your question was on the underwriting, every company does something different. Now, when I did it, we dealt with I think we were licensed with about 150 different companies. you're not going to use 150 different companies. What you're going to do is do what you specialize in and use 5 or 6 companies. That's what I ended up doing. And that's what our company did, is ones that we did that fit the niche for our clients. And with a first time home buyer, you're going to want somebody that specializes in first time home buying, as far as your agent and the person giving you the loan, the company, because sometimes they wholesale the loans out. And not to get too complicated, but they'll take a bunch of loans all the same, and then they sell them to somebody else. They have to pass the guidelines, whether it's automatic or manual, to get, to fit in this criteria. Then they'll package up loans and sell them to, somebody else. So that's, but you want to deal with somebody that's a specialist in your area.
Right. And I appreciate you saying that. I'm going to interrupt you just for a second, because one of the things that I know is I have talked to so many veterans who are, some of them are first time home buyers, but some of them are just, they're trying to buy their second home or whatnot. And they're very confused about when they can use the veteran mortgage and when they can't. And I was like, wait a minute, you can use it over and over again. What do you mean? And I realized, because there were years ago when I guess there was some limitations on it, and it's changed. And that's also part of the reason you should always find out what's happening with the mortgage and specifically what's the best mortgage for you. And in those 17 questions that I have on my website, give them away for free. It is so interesting to me that you need to ask the questions of going through what type of mortgage is best for you, but also what you just said is so key. Different mortgage lenders specialize in different things. And a lot of times it's kind of whatever area, and you and I can do an amazing one, that's why I said, don't say anything more about you being a lender. So we'll do advanced things. When you're an investor and you start to kind of lean in that direction of wanting to be a real estate investor yourself, then you start to really focus on, okay, so what are the mortgage ins and outs of, helping other investors, get mortgages. So as I think somebody who really loves to work with first-time home buyers, you start to specialize in that. I've also found lenders who have told veterans, and the reason I was like, wait a minute, I have to interrupt you and to say this is because I've had veterans come to me and say, I was told I couldn't do blah, blah, blah. Or I was told, and I was like, it's because that person doesn't do veterans loans. And so, or they don't know how to do it. They rarely do a veterans loan. And it's the same thing with real estate agents. If you all of a sudden have decided you want to open up your coffee shop, you've always dreamed of opening up your coffee shop, and this is going to be John Lee's coffee and chocolates or whatever it's going to be. You need a commercial. You need somebody who actually specializes in that type, and over the years, I've had a couple of people come to me and ask me to do commercial. And I always kind of laugh because I'm like, see, the problem is, you want a real estate agent who actually understands that space and that is really comfortable knowing the ins and outs of what you need for that. And that is the same with the mortgage person. You need the person who can help you with wherever you are and whatever that type is. And that's part of the reason. And I have 17 questions, of course, yes, 17 questions that you should ask a mortgage broker. And it's the same kind of thing, is you're just asking them those kind of details. What do you specialize in? What do you do the most kind of mortgages? Is it first-time home buyers, or do you work with veterans? And if they don't work with any veterans, you shouldn't be taking their advice on veterans loans. And if they don't do first-time home buyer mortgages, if that's not something, you can even ask them in the last 3 months, how many of these first-time home buyer, how many first-time home buyers have you worked with? And then what different products do you have for first-time home buyers? Because there's all sorts of programs out there that are zero down, just like the veterans loan or the USDA loan. So many people don't know that loan exists and what an amazing loan it is if you fit into the criteria. Now, of course, just like a veteran, you can't get a veteran's loan if you're not a veteran. But I think it's so important what you said, that you have to ask, again, we go back to that basic foundation of communicate with your lender, ask the questions. And one of the most important ones is, what do you specialize in?
Mm-hmm. And that's who you want to deal with, exactly what you said. I mean, so many people I see, we can go back to mentors, you get more out of it when you pay for something. And the more you pay attention most of the time.
Yep.
Okay. And that's when you learn the most. It's a mindset thing. But if you get your free advice from your brother-in-law or whoever, you're it's worth what you paid for it, and take that with a grain of salt. There's a reason they're not charging for that, and they're not making any money. Okay. There's a big reason. They might have got their information from the commercial with Joe Namath. I don't know,
Right.
or whatever the case may be. So yeah, you want to deal with a specialist in your area. And first time home buyers, it's so important because if somebody specializes in a different type, they might specialize in commercial real estate or something like that. But they are a relative of a relative, or, that's how a lot of the things happen that I see anyway. And I'm sure you've seen a couple of those deals too, like that.
And the other thing about first-time home buyers, and I'm sure you've seen this as well, is I've also found first-time home buyers who it might be a doctor or a nurse, and they are amazing in their field. However, they've come with an enormous amount of student loan debt. And there are specific mortgages that are out there, especially for the first-time home buyer. And again, sometimes I'm like, what do you mean you're a doctor, you're a nurse, you're an EMT, or whatever your specialty is? And even lawyers who come out and I say even because they're making a lot of money, but they have a lot of student loan debt, and there are very specialized mortgages that again allow for the ratios to be different. So before we run out of time, because I know we're going fast, will you talk a little bit about what does it mean when we talk about ratios, the debt to income ratio, and why does that matter?
Debt to income ratio is huge. A lot of people don't take that into consideration. A good example, let's say you have $1,000 limit on your credit card. Okay. And let's say you owe $900. Okay. That's at 90% of what's available to you. Okay. But your debt to income ratio, and that's an example. Debt to income ratio, let's say you can afford 30% is what the underwriters say. 30%, that's just to make an even number of what your income is. If you're making $100,000 a year, you can spend up to $30,000 on all your bills. Now that's not just your mortgage, but that's all your bills. So if you've got a big car payment, let's say you have a $1,000 car payment, you bought a Hummy because you're a Hummer or whatever because your credit was good. That's what people do. They go out and buy 2 or 3 cars. They bought their kids one. They bought their other kid one, and they got that's what people do all the time because they have good credit.
Oh dear.
So your income ratio, your debt to income ratio.
That's another whole conversation we won't go into.
Yeah, I know, but I'll just give you an example of what I run into, what I have run into so many times. And people do, but I got a friend at the dealership. I know you do. Yeah, he's your friend because you bought so many cars from him.
I know. I was going to say he might not be your friend. Let's define friend in a different way.
Yeah, but that's a good example because it comes up a lot. That kind of stuff comes up a lot. But if you go over your 30% in this case, you're not going to get a loan. And I've seen people that have the best, squeakiest clean credit, and they paid their bills they have forever and ever and ever, but they don't qualify for a loan. Or they'll put them in a different category and charge them a higher rate or different percentage. They have to bring more money to the table for a down payment. There's just a lot of factors that go into all that. And that goes back to your underwriting, and that would not necessarily be, or that could be automated. I mean, first of all, I think most things are automated now, and then you might go to one that's a manual after that if there's any question that we can do it, or they want the loan. A lot of times they don't even want the loans because of their percentages. They haven't sold enough this month, or they're only going 5% FH. There's just different things that different qualification that goes back to knowing what your mortgage lender and your bank will do and won't do.
And then also just to kind of go behind the idea of this, because I think so often we rush through and we don't talk about it, is the idea behind this and the ratios is the lender's looking for, and again, this is completely, I'm gonna say, this is my viewpoint on it, is that it's arbitrary in that it's almost like statistics on insurance. Are you going to get into a car accident? Well, the insurance company doesn't necessarily know for sure what the future holds. However, statistically, they know a certain amount of their people are going to probably get into a car accident. So the car insurance, decides on rates and blah, blah, blah. So just kind of with that idea and that theory in mind, the mortgage lender is obviously looking to make money on you as the borrower. And so they're also looking at these ratios to figure out, are you going to be somebody that they feel will, number one, pay them back, but number two, be able to make the money. So that's part of what the behind the scenes ratio is. I'm curious on your viewpoint on that.
Yeah, it's exactly right, Jennifer. They want the payments. They do not want the property. They do not want. In fact, that's one of the one of the strategies a lot of people use is buying the REOs, the real estate owned, from people that took from the banks and lenders that take the properties back for non-payments. They don't want the properties. They are not in they're not in the real estate business. They're in the money business, the mortgage business. So that's a huge factor right there. They want to make sure that they're going to get the payments, whether they keep your loan and service it themselves or they sell it to somebody else. They're looking at long term. They want payments for 15 years or 30 years or whatever the term is. They want that back. That's what everything is based on. Is the interest. Because as you know, the early years, you pay mostly interest on your loans, and then they get a little bit better as time goes on. If you ever look at the amortization schedules, there's ways to deal with that. Also, that's another story, but it's just, they want their payments. That's all they want is their payments.
Yeah. And it just understanding kind of, I think one of the other secrets, we talked about communication and I call it a secret in the fact that if you don't really fully understand it, then it is definitely a secret from you. And a secret to your success or a secret to first-time homebuyer success is communication. But one of the other secrets is honestly understanding the other person's viewpoint.
Yes.
And in this kind of realm, we're talking about not only the other person's viewpoint of the lender, but, look at all the other people that are involved, the other person's viewpoint as the seller, the other person's viewpoint as the real estate agent. And there's two different real estate agents, but all the different players. And, I'm always talking about, yay, we have to build your yay team. I used to call it the A team and now I call it the yay team. I'm going to take my little prop down here, my yay team. I think it is so important. We always find a way to, my yay is coming all over. It's so important that we realize other people's viewpoint, because if we don't, then if we just kind of get stuck, I used to call it getting stuck inside, Jennifer, getting stuck inside yourself, meaning that, if you don't look outside your own viewpoint, your own experiences, and you don't see the other person's viewpoint, a lot of times you just aren't going to be successful in life in anything you're trying to do, but especially with business deals, you have to see the different viewpoints. And obviously it's one of the reasons, and I would love, I know we're live on the air. So I'm going to ask you this, John, live on the air. Hopefully the answer is yes. But I'm hoping you'll come back next Saturday, same time, same place for 1 hour with me to talk about the next one, which is the viewpoint of what you alluded to earlier, which was the being your own banker and learning to be the bank, be the person who is handing out a mortgage. And we're going to shift. Okay. We're talking about first-time home buyers this week. And then next week, I want to talk about real estate investing basics. So would that be okay? Can you come back next week?
I sure can. That would be great. I'd love to talk to you some more.
Okay, good. So next week we'll be on from, again, 8 to 9 a.m. Eastern time. Your time, it's 7 to 8 a.m. Central time. But I think, and the other thing is for anybody who's interested, I do want to mention, I did create a first-time homebuyers class. And I went ahead and I delivered it live, and now it is pre-recorded. So you can go do it at your own leisure. So if you could just go to jennifersclass.com. So Jennifer, JENNIFER, and then S, class. So there's no apostrophe, obviously, in www URLs, but if you go to jennifersclass.com, and I love helping first-time home buyers. And one of the reasons is because I know that if you learn the basics of first-time home buying, I can save that, or I can help you save thousands and thousands and thousands of dollars. And not only on your first transaction will you save money, but you're going to learn principles that you use. And one of the first things I do in that class is really go through, we went through the concept of underwriting and the concept of what an automatic underwriting versus manual underwriting is. But if you understand those concepts, then you can make good decisions in real estate. And that's really my passion, is making sure that we help people. And it's funny because I have a lot of people who have taken that class who are not first-time home buyers. So it really is for anybody who is a buyer out there. When I first created it, it was for first-time home buyers. And that's when I also discovered how many people, they never learned. I hate to say the right way, but they didn't learn a lot of the basics the first time they bought. They just kind of signed blindly and they didn't really learn anything. And so then when they went to make their next purchase, they started making big mistakes. And as you know, big mistakes with one real estate deal can really damage you financially, right?
For a long time too. You can dig out of some of that stuff, but it takes many years. It's such a good point. And I think everyone should take, you call it a first-time home buyers course. It should just be a home buyers course, because that is so important right there. And like you said, I had so many people that were buying their second, third, fourth, or even refinancing, and they didn't know some of the basics that you'd think they would just know because they did it a few times. No, it's not that common. Common sense isn't always as common as it should be. And what you and I might think is common sense is just because they don't know and they don't understand. And in what you said was so important, Jennifer, about asking the questions of what you don't understand, because some people don't want to ask questions. I see this a lot in some of the things, meetings I go to, especially when they're specialized and people will use abbreviations. Oh, well, what about the BOM? And nobody will say nothing because they act like they know it. Half the people don't know what the heck they're talking about.
Oh,
so just ask the question.
Yeah. And interrupt people and ask that question. Thank you for saying that. And that's also part of the reason I put together that class, is because I kept getting asked the same questions. And I was like, oh my gosh. And I just, my heart would hurt. And I realized, how do they not know this? And especially, like, I remember this one of my favorite, ironically, they were selling their house. They weren't even buying. And it was so funny because I went through the buying side as well as the selling side. And he's one of my favorites just because he was not afraid to ask questions. And two, he said to me, thank you. I have bought and sold, I think it was 7 properties. And he said, and nobody's ever taken the time to help me understand these basics. And he said, I will forever be grateful, not only for me and my wife, he said, but I'm going to be grateful because now you're going to help all the other people, his kids, the next generations. He's like, these basics are so incredibly important. And so that's why I put together the classes. It's really, really important that buyers understand the basics. And once you've got the basics, and it makes me think about, some of the people that we admire in life, whether it's, if you look at sports and it's golf and it's Tiger Woods, do you go, oh my gosh, how did he make that shot? Or like a Michael Jordan, or, tons of other athletes come to mind when you think about it. And they'll always say the same thing. They'll go back to, I practice the basics over and over and over again. And the strangest thing to me, real estate, one of the biggest financial decisions, something that will impact us in such profound ways, and not only our financial future and our financial stability, but also going forward, it can help the generations that come after us. And yet we don't practice the basics. We just, as a society, a lot of times we just skip right through the basics. And you think about that as an athlete, if you did that kind of stuff, you'd probably end up with an injury, if not in the hospital. And I think that sometimes people end up in their financial hospital because they don't practice the basics.
Mm-hmm. And the first time home buyers, like you said, that class, that's just invaluable, because even if you're a seller down the road, you're going to understand where everyone's coming from and what needs to happen. And just so many people just need that basics, to even get started and to do anything down the road. You can apply that to everything.
I agree. So we're going to talk next week. We're going to talk about being the basics of being a real estate investor, which is a completely different thing. But before we go, I don't have your credit book. Will you show your credit book?
Yeah, I'll just yeah.
So how do people get your credit book if they're interested in that?
Well, I'll tell you what, you can send me an email and I'll give you a PDF copy. I've never done that, but I will do that for anybody that's listening for you, Jennifer.
Oh,
I
you're
have some other gifts I'll give you too, if you want to do that. Just my email address right there, thedealionaire@gmail.com. And yeah, we can talk more about that, but I'd be happy to give them a copy of that.
I love that. Thank you, John. And like I said, next week we'll be back up on YouTube and we'll probably be on Clubhouse. Who knows? We may pop up other places as well, but for sure we'll be back on YouTube. And John Lee, I just adore you so much. Thank you. Thank you for being with me.
Thank you,
Yay!
Jennifer. Thank you
Hey,
so much.
so let's do that at the end. I want to make sure we do this at the end of every show. Now you know what I'm going to do.
Danny, come here.
Bring him
Let me get Danny.
Yes, get Danny, because I want you to lift your voice and let's do the whole.
Say yay. You want to
Just
celebrate?
say yay.
Jennifer, say yay.
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 Okay, do it again.
Yay. He's got his love doodle here.
Yay.
Yay.
I love it.
Okay.
Okay.